All right, welcome to Part B of Lecture 34. Let's take a look at the Banking Acts of 1933 and 1935. All right, so in Part A, FDR signed an Emergency Banking Act declaring a bank holiday, 4-day long. Federal Reserve sent additional currency to the bank. FDR delivered a fireside chat trying to reassure the American people about the banking system. A few weeks later, he signed an executive order banning the ownership of more than 5 ounces of gold in the country, whether gold coin, gold bullion, gold certificates, and you had to sell your gold to the Federal Reserve System at $20.67 an ounce. And then Congress, a few months later, delivers that gold to the U.S. Treasury, transfers it to the Treasury, and declares that that gold will be worth $35 an ounce. So, huge movement here. The Federal Reserve note is no longer redeemable in gold at the U.S. Treasury, and this coin is no longer in existence. So, sea change in the American monetary system. What about the banking system? Now, in November of 1933, FDR made this statement. The real truth of the matter is, as you and I know, that a financial element in the larger centers has owned the government ever since the days of Andrew Jackson. This country is going through a repetition of Jackson's fight with the Bank of the United States, only on a far bigger and broader basis. It's FDR in November 1933. That was a letter that he wrote to a former advisor to Woodrow Wilson. Woodrow Wilson is no longer alive, but a former advisor of Woodrow Wilson, Colonel House. So what is FDR talking about here? What's this financial element? Well, in 1933, there were several financial power blocks. J.P. Morgan Company is huge. It's still far and away the most powerful bank in New York City. J.P. Morgan and Company began largely as an investment bank, but has broadened out into commercial banking, accepting deposits from clients and using some of those deposits as a base from which to invest in securities and other investment banking actions. But J.P. Morgan Company has rivals, and some of them have become quite prominent in the last decade. Bank of America, operating out of California, is a big rival commercial bank. And the president of Bank of America met privately with FDR early in his administration. Then we have two relatively newcomers in the investment banking world, Lehman Brothers and Goldman Sachs. Bank of America is a commercial bank primarily. Lehman Brothers and Goldman Sachs were primarily investment banks. They didn't take many deposits from clients as a commercial bank would. These are investment banks. And then in New York, you have National City Bank, which later became Citibank. National City Bank in New York, the president of National City Bank in New York was James Perkins. In 1933, he was a Rockefeller ally in the Rockefeller orbit, and he met with Roosevelt shortly after the inauguration to talk about banking policy. And then we have two other banks, Chase National Bank and the Bank of the Manhattan Company. Now in the 1950s, these two banks will merge and become Chase Manhattan, but at the time they are separate banks, investment bank, commercial bank. And in 1930, there was a power struggle at Chase National Bank, and John D. Rockefeller Jr. snatched it from the Morgan Empire, and the Chase National Bank, the largest shareholder in this bank, became John D. Rockefeller Jr. And then the chairmanship of this bank was then handed over to Winthrop Aldrich. Winthrop Aldrich was the son of Nelson Aldrich, who you will recall when we were talking about Jekyll Island and the Federal Reserve Act in 1913. Winthrop Aldrich was his son, a banker, and the brother-in-law of John D. Rockefeller Jr. So this is obviously firmly in the Rockefeller camp. And Winthrop Aldrich also had private meetings with the president. The fact of the matter is that FDR, he was an Eastern establishment man. came from a wealthy family. You could say quasi-aristocratic family in New York. And so he has friends in high places, primarily among these financial rivals of the Morgan Bank. Why is this important? Well, in 1933, Congress passed the Banking Act, and there are many different levels to this, so we'll tackle one at a time. But it's also known as the Glass-Steagall Act, named after the co-sponsors in the Senate. The Glass-Steagall Act, first of all, separated commercial and investment banking. So if you're a bank, you have to either be a commercial bank or you have to be an investment bank, but you can't do both. You can't, take client deposits as a commercial bank and then use their deposits to speculate in securities. Okay? By the way, Glass-Steagall Act was repealed in 1998 under the Clinton administration. But between 1933 and 1998, you were not allowed to combine those two modes of banking. This was a big blow to J.P. Morgan and Company because, while most of these banks specialized in one or the other, J.P. Morgan Company did quite well in combining those two functions, which had helped them to establish a semi-hegemonic role in New York finance. So J.P. Morgan and Company, very, very opposed to this new separation of commercial banking and investment banking, and lobbied hard to get it repealed. Doesn't work. And actually, Winthrop Baldrige of Chase National Bank and the head of National City Bank, James Perkins, personally lobbied FDR to have this separation. So some bankers supported the separation. Morgan Bank does not. What else does the Banking Act of 1933 do? The Banking Act of 1933 established the FDIC, the Federal Deposit Insurance Corporation, which insured consumer bank deposits up to $5,000. Today, it's up to $250,000. Interestingly, FDR was unsure about this component of the Banking Act of 1933 because he feared that by the government guaranteeing deposits, that this would encourage banks to take too many risks with consumer deposits. And this is one of the reasons why, we'll separate commercial banking and investment banking so that consumer bank deposits won't be rated to speculate in securities. By the way, there was one exception to the rule that commercial banks could not invest in securities, and that was government securities. Commercial banks were allowed to invest in government securities. Government always looking out for itself, but seen as a safer investment, perhaps fairly. Another thing that it did, I didn't write down on this slide. The Banking Act of 1933 also prohibited banks from paying interest on demand deposits. So if you're a commercial bank, you could no longer pay interest. You can no longer pay your clients interest on their demand deposit. You can only pay interest on a time deposit. What was the motive there? Well, FDR said that interest payments on demand deposits encourage hoarding. So it's inherently deflationary because you're essentially paying consumers to keep their money in the bank, which is, if FDR wanted to combat deflation, that's not something you want to do. The flip side of that, many of the smaller banks, small and local banks, not these guys, not the big players, but smaller banks, many of them were offering higher interest payments on demand deposits than the big banks were willing to pay, and that was cutting into a lot of their business and presented an element of competition to them. Well, you eliminate that, and that advantage that some of the smaller banks had was taken away. Unintended consequences to laws, or perhaps intended, depending on who was behind it. Then the other component, this was a huge act. Banking Act in 1933 was mega. Established the FOMC, FOMC, the Federal Open Market Committee. Okay? Meaning, from now on, open market operations and decisions about monetary policy, the big decisions, will no longer be independently determined or set by each Federal Reserve Bank, but will be determined by this committee. Now, according to the Act of 1933, the FOMC consisted of all 12 of the Federal Reserve Bank presidents. Okay? All 12 of the Federal Reserve Bank presidents. Then, in 1935, Congress passed the Banking Act, which further revised the Federal Reserve System so that the FOMC would include all the members of the Federal Reserve Board in Washington, plus a rotating 5 bank presidents. So not all of the 12 Federal Reserve presidents, but 5 of them. The New York Fed, the president of the New York Fed, had a permanent seat on the FOMC. So it was actually a rotating 4. The Federal Reserve Board, the New York Fed, and then a rotating 4 of the 12 Federal Reserve banks, and that was the FOMC. Why is this important? This was a signal that, all right, power now in the Federal Reserve System is being shifted from the New York Fed to the Federal Reserve Board in Washington. Okay, it's big. So the Federal Reserve Board in Washington gains a lot of power here relative to the 12 district banks in the Banking Act of 1933, and especially the Banking Act of 1935. By the way, the Banking Act of 1935 also stipulated that the Federal Reserve Board in Washington, D.C. has veto power over the selection of a president at any of the 12 Federal Reserve banks. Okay? So, and who controlled the New York Fed? It was in Morgan hands. So, the Morgan Bank is furious with FDR, is furious with this Banking Act of 1933 and with the Banking Act of 1935. At the last minute when Congress was debating this Banking Act of 1935, the Morgan lobbyists attempted to persuade Congress to put slip an amendment in there that repealed this separation, but they failed in that. And so Morgan had to finally throw up its hands, and a group of executives within J.P. Morgan left and formed Morgan Stanley. J.P. Morgan went commercial banking, Morgan Stanley went investment banking. But, quite upset with the FDR administration. Now, if you're into conspiracy theory, as all this is going on, the most decorated Marine in U.S. history up to that time, Smedley Butler, who I've mentioned before in a previous lecture, veteran of World War I, won the Medal of Honor on 2 separate occasions, published his book, War is a Racket, criticizing the military-industrial complex. Smedley Butler came forward and said that he was approached by some men who purportedly represented Morgan interests, and was asked to lead an army of 500,000 veterans into Washington, D.C. to topple the Roosevelt administration. The plan was have these veterans, 500,000 of them, D.C., force FDR to recognize a new administrative position, which would have been called the Secretary of General Affairs. Butler would have been named Secretary of General Affairs. Butler was popular among his countrymen and very popular in the military. And then FDR would have been reduced to a figurehead role. And but Butler, a patriot, exposed the plot, went to testify before the House and made this statement about how he had been contacted in a plot to overthrow the Roosevelt administration. And historians call this the business plot. Now, was there any truth to it? Historians have different opinions. We don't know 100%. The House determined that there was truth to it. There might have been some element of truth there, but maybe Butler was also being deceived. The New York Times called it an elaborate hoax. J.P. Morgan Jr., of course, denied it, maybe truthfully. And but anyway, an interesting little subplot in the whole thing. Butler, and Butler had, in 1932, very, very recently, Butler had appeared in that summer in Washington, D.C. to support the Bonus Army, which was a group of World War I veterans who had marched to Washington, D.C. in order to demand an early payment of their the bonus that they were supposed to receive for their service in World War I. Butler was supportive of them. So, Butler had some history here, but, whether or not there was any truth to it, again, historians disagree, but there's Butler making his statement. So, let's hear what he had to say.
I appeared before the Congressional Committee, the highest representation of the American people, under subpoena to tell what I knew of activities which I believe might lead to an attempt to set up a fascist dictatorship. The plan as outlined to me was to form an organization of veterans, to use as a bluff, or as a club at least, to intimidate the government and break down our democratic institutions. The upshot of the whole thing was that I was supposed to lead an organization of 500,000 men, which would be able to take over the functions of government. I talked with an investigator for this committee who came to me with a subpoena on Sunday, November 18th. He told me they had unearthed evidence linking my name with several such veteran organizations. As it then seemed to me to be getting serious, I felt it was my duty to tell all I knew of such activities to this committee. My main interest in all this is to preserve our democratic institutions. I want to retain the right to vote, the right to speak freely, and the right to write. If we maintain these basic principles, our democracy is safe. No dictatorship can exist with suffrage, freedom of speech, and press.
Wow. All right. So, was there anything there? Well, perhaps we'll never quite know. I'm undecided about it. But, it's a scary time. You look at 1933, 1934, unemployment is just off the charts. The country is anxious. And then you look at what's happening in Europe at the time. In Europe and in the Soviet Union, Germany, Italy, there's a lot going on. And then when you also consider the fact that especially the Morgan interest was furious with the move away from gold, okay, and then the series of banking acts that appeared to target much of their financial and economic power, you could see it possibly as being a real conspiracy. On the other hand, perhaps there was nothing there. I don't think Butler was just outright lying, but perhaps he was deceived. But anyway, in any event, we'll go ahead and end there. And for next time, we will take a look at the New Deal, the results. How does the New Deal do? Right? Did it work? We're going to take a look at the economic data. And there's a recession in 1937. 1938, we'll take a look at that as well and evaluate FDR's economic performance. See you there for Part C.